Hello and welcome to another update video about Bitcoin. Bitcoin continues to move up a little bit, but there's today a lot of uncertainty, I would say, in the market. I think the markets are waiting. As I said earlier today in the videos, trading today is probably quite unpredictable. It's difficult. It's going to be, unpredictable because we obviously today have the interest rate decision. And that will be in round about 6 hours. You can see that on the CME FedWatch tool, so pretty much 6 hours from when I record this video. Market expectations are around 75 basis point increase to 100, whereas more probability is put on the 75% increase. 75 basis point increase. My view is if we see that 75 basis point increase, we are going to see volatility, but it probably won't have a significant dip following it. Of course, I don't know because you never know how these things turn out. But if we see 100 basis points, I think it will have a negative impact on the market. Because what I don't know is how much is already priced in. But certainly, I would say the 75 basis points are expected by the market. Anything less would have a rather positive impact on the market. However, I don't think the 50 are realistic. It would be 75 or 100. Okay, so that'll be in 6 hours. And here Bitcoin, it's moving up a little bit. We talked about it earlier that the wave 2 could be complete, but we didn't see enough structure yet here in the chart. To be fair, I still don't really see enough structure. We could count it as an impulse, but then this is already quite weak. So even if we counted it on a lower time frame as a 1, 2, 3, then here, if this was the 4, but then you have overlaps. So yeah, I'm not convinced yet to say that this is an impulse up. What I would like to see is a move above 21.6, above that region here, to be more confident that this wave 2 or wave Y of wave 2 is complete. And then I think more confidence will be given above a breakout of above the wave B. So an impulsive wave up, an impulsive wave structure to the upside, and then a breakout above the wave B high at 22.2K, in my opinion, would strongly signal that this wave 2 was over. I mean, we reached the perfect target area for the wave Y. This was the 1-to-1 ratio here at 20.7K, where we waited for. Basically, that was a very, very likely support level. We did bounce off that. We broke out of that channel, to the upside. And now the next target for the bulls needs to be that resistance level. I mean, if we climb above the wave B high, I think we can be much more confident that wave 3 is starting or has started. Everything below that is still involves a lot of downside potential. Okay. Also, as I said, we've got the interest rate decision, so there will be a lot of volatility, probably starting like an hour before that. And that could then take a few hours to a few days until the dust is really settled. But Bitcoin, as I said before, has a realistic chance for a bullish breakout here. It is still very unclear though. And Bitcoin's latest drop here to the downside has messed up that nice structure because we had a wave 1 here, a wave 2. This could have become a 3. Even though we didn't quite reach the targets for the wave 3, it could have still been a wave 3 had we stayed above a certain level here, above 21.9K, that wave 1 high. We didn't, therefore we have to count it as a 1, 2 and another 1, 2. And the wave 3 would be coming next in yellow. And that could take us to around 29.5 to 30K. That was the 1.618 extension. Had a few questions about 1-2 setups. What is it? Well, it is just the way the Elliott waves work. So when we start counting here an impulse in a wave 1, this obviously consists of 5 waves in its most simple form. Then we have a wave 2, consists mainly of 3 waves in its most simple form. Then here what you would normally expect is a wave 3. The wave 3 in pink, obviously, because this is the wave 1 in pink, the wave 2 in pink. We'd be waiting for the wave 3 in pink. That is most reasonably what you would expect next. Now, if that wave does not reach the wave 3 target, in this case it would have been, so Bitcoin in the wave 3 would have had to move just roughly to reach wave 3 targets, it would have needed to do a 26k, okay? 26k, 25.9, whatever. Now, it did only reach the 1.236 Fibonacci extension. Okay, so it could still have been a wave 3. A wave 3 doesn't necessarily need to reach the 1.618, even though it is the most likely target. It could have still been a wave 3, but only until the following wave, which would then be a wave 4, only if that wave stays above the wave 1 high here at 21.9k. If the wave 4 goes below the 21.9k level, which it did, it can't be a wave 4 anymore because it came down too much. Yeah, a wave 4 cannot cut into the wave 1 price region. Yeah, at least not in this kind of impulse that we're counting here. In that case, therefore, it has to be another 1 because it's an impulse and a 2. And that is then this 1-2-1-2 setup. And you can get a few of them. If you get too many, it is very unrealistic that it still will develop as an impulse. Because if you get too many of them, what does that mean? Well, it means the following. It means this market gets pumped up like crazy. And then at some point it just gets unrealistic. Why? Because if we count this now as a 1-2 and a 1-2, that's fine. But to this 1-2 setup in yellow, we now need a wave 3. Now, because this was quite a long wave 1 then, and this a wave 2 obviously, we have to readjust now the targets. Now, this subwave, this 1-2 setup in yellow is obviously a subwave setup of the wave 3 in pink. Now, just this yellow wave 3 in itself now would need to reach in the 1.618 extension, in an ideal target situation, the 29.5k level. So that means that wave 3 in yellow needs to get to 29.5, then there will be a wave 4 down and a wave 5 up. Only that wave 5 to the upside then will finish off wave 3 in pink. That wave 3 then will be followed by a wave 4 and a wave 5 to the upside. And then we're already at 35k or something, maybe even more. But let's just imagine we get another 1-2 setup now. So let's say Bitcoin now moves higher, maybe to 26k, and will come down again and will cut again into wave 1 price region. Then we have another 1-2 setup. What does that mean? That means we have to add another layer of waves, because this 1-2 still exists and this 1-2 still exists. That means we have another 1-2 which also will need a wave 3, a wave 4 and a wave 5. When that wave 5 is then complete, only then the yellow wave 3 will be complete. Then you come down in a 4, you move up in a 5. That will be pink wave 3. And you can see the more wave 1-2 setups you have, it can either be very bullish because it means you're loading up the market for much higher prices going forward. That is why young stocks and young assets like Bitcoin have so many 1-2 setups, especially on the higher time frames. Bitcoin has a lot of 1-2 setups on the weekly and the monthly time frame, okay? That sets it up for a very bullish future, like the Apple chart had in the 1980s. But if you have too many of them, especially on a smaller time frame, it rather confirms the view that we are in a bearish situation, because it means you have a lot of overlaps, and then you need to ask yourself, how realistic is it that we get into a massive bull run? Yeah, with targets of like 50k first, and then, you know, because you load up the market with these 1-2 setups. They all need their wave 3, 4 and 5s. So that's sort of the idea around those 1-2 setups, and why they can be very bullish. And if you have, let's say, 3 1-2 setups, that's fine, maybe even 4. If you get too many, it is most likely going to break to the downside. Okay, so that was just an explanation, because I sometimes forget a lot of people have not so much exposure to the Elliott Wave method. Hopefully that makes sense. The price didn't move a lot anyway, therefore I think this explanation was hopefully quite helpful in this video. And yeah, we're waiting for a little bit more clarity in the structure, and the key breakout here would be a move above that resistance zone, and next the wave B high. And if we go below the wave 2 low at 20.7k, we're probably going to come lower to 20k. That would be the 78.6% Fibonacci retracement level. And as I said before, if we go below 19.5k, I think that increases massively the chances that we are going to go even below 17.5k again. Okay, so the 19.5k level is for me a very important one. And I'm not talking about just breaking it on the hourly and then recovering quickly. It's more like you go below it, you retest it from below, and maybe then you see a bearish candle indicating we are substantially dropping below that 19.5K level. All right, and that's my view about Bitcoin. Hopefully you liked it. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.